YouTube, TikTok. We shouldn't say. Cannot again, is it? Yeah, so we got to plug it out. Yeah. Okay. Okay.
Testing.
Yep. Does it work now?
Testing.
Can it work? Well, actually, if there's two colors, does it work? Let us check, okay? But it should work, right? It's connected already, ma. That's why you off and on already, is it? Or you don't plug up, then you off and on. Testing for TikTok.
I don't remember it having a red color. I think.
Right. For those of you on IG, YouTube, and Facebook, just give us a while while we. the other platforms we are trying to figure out technical difficulties on one of the platforms. Okay, so give us a while. Tell you what, you help Kim with this while I get started for the rest. Okay. For our viewers on TikTok, right? Give us a while we figure out the audio. You could head over to maybe David. You could help us put down into the chat over at TikTok. Can head over to the other platforms to check us out first. Yeah, while we go through. Let me get started. Yeah, don't want to keep our viewers on YouTube, Facebook, the other platforms waiting.
TikTok can hear.
So I want to first start off by sharing my thoughts about this particular article, fresh from the oven, dated today, 24th. Today we are the 24th of June. This is from the Business Times. Okay, in this particular article, they've been the title of the article, right? See the positives in having choice HDB resale flats that transact over $1 million each. Quite controversial. Because this has always been a very touchy topic for everyone. It's quite controversial. People tend to not like it when we talk about this. Okay, good. Okay, hello everyone on TikTok. Thanks for being patient as well as all the other platforms. I think the audio is fine now. Okay, you haven't missed out by much. Again, thanks for joining us. Please do help us like and share. This is our weekly live. I think this is our fourth time.
Yeah.
Fourth time. The 1 month anniversary of our weekly live. It's been fun so far, right? Keep the questions coming. And so for today, I want to start off first by sharing my thoughts about this particular article from the Business Times today. Very gutsy on the journalist part to talk about this, because generally I think a good 90% of people in the market don't really appreciate news like that. Number one is because their flats are not worth over $1 million. If they are a seller, if they are a buyer, this just shows prices are very, very high. Okay, but he does state some pretty legit points in this article, and I thought, we could go through it together, and we will share some of our perspectives on it, right? So the subheader, right? Robust market creates positive wealth effect, supports young locals in their pursuit of condo ownership dreams, and help to ensure retirement financial adequacy. So let me just get down to it. Right, so the article of course starts off first by stating some of the very, very high priced ones. We have the record recently 1.66 million over at Dawson, okay? That's traditionally always the ones that hit the record price. If not, it'll be somewhere in Bishan, some of the high floor DBSS ones, right? So these two are traditionally the ones that set the record. So here he stated some of these points, yeah. 1.5 mil works out to be 6.3 times the annualized monthly household income for the 8th decile resident employed household of about $20,000. Personally, this particular data point, I like it that he used decile of resident household incomes. That is something that, for those of you who follow us, we use a lot in our analysis as well, just to really track the affordability note. It's good that he didn't use the median household income across the board. Yeah, it's because the folks that are buying all these high quantum HDBs are very much the same folks that are buying condos, and they belong to the top 20% of the market, really. And so it's good that he used the 8 decile versus having numbers like the median household income, and this is because median household income should stand around, I believe, 11 or 12,000, if I can remember correctly. Maybe Vic can help to double check on that median household income in 2024. But the only thing here is this. What's the relevance of 6.3 times that of the average monthly household income? Because this is not what somebody will look at if they're purchasing a house. Oh, it's 6.3 times my household income. I cannot afford it, right? That's not what people do. A more relevant data point would be then calculating at 19,948,000. What's your likely loan size, right? Is it a loan that you can afford? Up to 1.5 million. The fact is yes, right? You are well able to afford in terms of loan. In terms of loan for a $1.5 million property. As a matter of fact, at $20,000, I believe, loan-wise, you should very easily go up to almost 2 mil to 2.5 mil, closer towards 2.5 mil. Yeah. So on a loan basis, these price points, a lot of people can still afford. And at $20,000 combined household income, let's say you've been working for maybe about 5 years, if you save properly, you could also well afford the down payment for something like that, okay? Right. In this point, he states, right, certainly very few HDB resale flats fetch close to $1.5 million, and one may need to budget $1.5 million for a resale condo in the same area, which is also another interesting point. I have highlighted this before. How does this prime location housing scheme? Okay, so one of the reasons why we see a surge in numbers of $1 million HDBs, especially in the central areas, is because the demand have all shifted towards resale HDBs. You found a number?
Yeah, I just got the PDF.
Oh, okay. Yeah, so the implementation of this prime location housing scheme, okay, has driven a lot of demand into resale properties in those same areas, because the people that want to buy all these properties, they are not eligible for the prime location housing flats or the plus flats, right? Even in the resale market, because their income must have passed the eligibility criteria. So that's driven a lot of demand. So hence pushing prices of all those HDB flats up. Now, how does that impact the private market? Okay, so I do see positive effects of the prime location housing scheme on the private market for the very exact reasons stated over here. As the HDB prices go up into this kind of levels that is almost the same as private properties, of course you're not going to get like for like in terms of the sizing, or maybe even in terms of the tenure, right? But it was going to force people to think about it, yeah? Because at the end of the day, private, there are less rules involved, number one. Number two, private, you are able to use total debt servicing ratio to assist with your loan. Hence, you can loan a lot more. If you're talking about PRs don't have to wait 3 years after securing their PR to purchase a condo in this area, but they do have to wait 3 years to pay the same price to buy a HDB in that same area. So all these different factors have kind of gave us this opinion that all in all, prime location housing scheme helps centrally located condos, especially those that almost the same price as HDB's one. I believe actually anything at this point in time less than 2.5 million will benefit from those from this prime location housing scheme. Yeah.
80th percentile.
Yep. 80th percentile stands at, back to the previous point, 80th percentile stands at about 15,000 to about $18,000. Median household income at the 50th percentile stands at,
Go backwards.
if I remember correctly, it should stand at about 11 or 12,000. Yeah, 11 or $12,000. Oh, actually I have the numbers here. Median household income, I have the data from 2023, 10,000. So if you go to top 20, it's almost double that number. Okay, now moving forward. I'm going to skip to the points that I want to talk about, right? This whole wealth effect. So in this part, what they are saying is that when you know your house, it's valued at a good amount of money and you're sitting on profits, you tend to be a bit more confident in your spending. Yeah, that's what they are saying. The wealth effect, and it has trickled down effects on all parts of the economy, right? You're talking about F&B, in this article you're talking about F&B. Anyway, if you would like to take a look and read this article on your own, you could go over to our Telegram group, we'll put it over there, or simply drop us a text. We're happy to send this article over to you, then you can read it in your own time, because I'm just stating some of the salient points, right? But in general, having a healthy price for your asset gives you confidence in terms of your spending, which has trickle-down effects on the economy. This is what they are trying to say. Right? Letting many Singaporeans enjoy asset appreciation of their HDB homes can help locals deal with possible issues of envy and resentment that might arise from living in a city where some experiences are well beyond the financial reach of the general public. This one may not be extremely relevant in the Singapore market, right? You may not really feel it all that much in the Singapore market at this point in time, but it's a very real issue once you go to other countries that don't have HDBs, okay? Because if you are going to, give for example, right, a country like Taiwan, right? The young, when they come into the workforce, even after working for 5 to 10 years, or Korea, for example, right? Owning a home is something that is not even within their realms of consideration, right? Yeah, and of course, in the long term, this will result in a lot of resentment, not just with the wealthy, but also with the government and all this. Then you create a lot of political issues and that kind of thing as well. So that's one of the things that wasn't really highlighted inside this particular article, because at the end of the day, it creates a lot of stability by having asset prices being held at a consistently high level. Now, the very tricky thing is how to keep prices at a consistently high level, but yet still affordable, right? And I think this is really that little push and pull and release kind of thing that the government is, having a really hard time trying to control, but yet, in our opinion, still doing a really good job at it. Yeah, and later on in the article, I'm also going to talk about some points of why they need to do it, why they need to allow certain segments to have the price come off. Okay, let me explain. Right, in this part, they also talk about how having very high price HDBs, having HDBs at high prices help couples upgrade as well. Okay, and this is kind of like assisting with social mobility. Yeah, because not everybody can have a pot of gold given to them by the government. More and more people have that, but not everybody. Yeah, but having a good HDB flat, earning profits from a HDB flat, it's as good as having a golden parachute from your parents, because it gives you a good lump sum of money to allow you to pursue these dreams if so you want. If don't want, you can just sit on it, continue to let it appreciate should the lease be very, very decent. Okay? Now, this point is where things get a little bit trickier. Okay? Funding for retirement. Okay, because in recent times we've been doing quite a lot of cases of people approaching us talking about, I want to right size my property, right? Wow, the prices are so high right now. And then after that, they are talking about this removing of the 15 months wait out period and whatnot. And people are really a little bit confused as to what is the right or best thing for them to do. Okay, like recently we spoke to a family. They are looking to right size from their centrally located 5-room HDB into a 4-room HDB within the same block. We are selling the 4-room HDB within that block, and they were staying in a 5-room HDB within that block. You know what's the interesting thing? Interesting, I don't know what the right word for it, interesting or sad thing lah. We calculate for them because the price of their 5-room is about 1.2 to 1.3 mil. Let's just take 1.2 mil. But the 4-room in the block is priced at about $950,000. So while you might think like, okay leh, got about $250,000 if they sell and they right size, right? The thing here is that at the end of the day, I'm not going to run through that calculation. Maybe in the next session, I will run through that calculation for you. After they finish all the things, because there's also CPF refund that's going to be locked into the RA, there's obviously transactional costs, agent fees, legal fees, and all those fees. At the end result, it turns out that they're going to only collect back about half of that whole amount, that 250,000. By the time we calculate finish, it's about 120,000 that they're only going to get out of it. Then they got them thinking like, wow, that 120,000 is split husband and wife, $60,000 each. Then you could see their face go like, then is it really still worth the while, right? Right sizing the house, go through all that hassle for 60,000. So right now they are still thinking about it, and it's a problem, and it's something that we face a lot nowadays. And this is not really so much mentioned in this particular article. Why, right? Because in this article, they are talking about a lot of elderly here selling and then buying short lease 2-room flexi flats or community care apartment from HDB. Theoretically, it's correct. HDB is doing the right thing to offer some of these options to people. But the thing is, people work very hard their whole life, and they are very used to the areas that they have already been located at. So unless you provide these cost-effective options all across the island, then people may be willing to consider, but not everybody is willing to consider. The people that spoke to us are not really very interested in considering. So there was one case, downgrade from Bishan 5-room into Ang Mo Kio, but still one in that central area, so they went into Ang Mo Kio 3-room, 3 or 4-room. At least the one that Bishan one had 1.5, the Ang Mo Kio one slightly older lease, they got it about $600,000-$700,000. You 算到来 still quite a decent chunk of money lah. But like for this particular case, because they were in this central location, the supply in the area is not that high. If they want to buy, the cash out is not really a lot lah. It's not really a lot, okay? So it really depends on the elderly. Or if you are elderly yourself, then it really depends on you. You have to manage your expectations, okay? And the problem a lot of people face is that while they want to cash out, they feel the house is too big for them, they hope to cash out, get less stress, retire comfortably, but they still have a lot of requirements. Want to be in the exact same area. And then the lease is still like, it's only 20 years in, so balance about 80 years, and definitely the price is going to be expensive. So you don't expect a lot of cash out. Your cash out naturally comes with selling an expensive product and buying a much cheaper product lah. So the lease buyback scheme is also quite attractive to people, right? Nowadays it's a lot more attractive to a lot of people, the lease buyback scheme, because that allows you to continue to stay in your flat. Number one, you don't incur all the transactional costs, right? Number two, right, provided your RA is already full, you don't have to return any money to your RA. I think you essentially get quite a fair chunk of cash out now. And I believe that scheme will be increasingly attractive or increasingly utilized by people as overall prices continue to go up. The only way that, which I mentioned earlier on, that I feel the government can create some sort of balance, and this is something that really all HDB owners should be aware of, is what? How do they keep properties in a certain area cheap without offering short lease 2-bedroom flexi and community care apartments? How? by allowing existing flats to depreciate in the lease, and then hence very naturally they have reducing prices, right? So say for example, right, your flat now 50 years, it dwindles down to 20 years, right? How to still keep demand for those flats, right? By appealing to some of the elders, the elders that hope to cash out their expensive ones, still want to stay in that same area, but in that same area have some 20-year-old, 30-year-old balance flats, they will then go and buy it because it will be naturally very cheap, a whole demand and supply thing, right? Because the youngster won't go and buy, because the youngster will be very scared. You don't go and be a youngster and go and buy and pay full cash for it. If you want, then nobody can help you. But it is allowing the forces of demand and supply to push the prices of those flats down, keeping them still affordable or keeping them really, really cheap for the sake of the elderly. So that is one of the other options available for you. And another option available for you in terms of your retirement planning is to keep your second. So a lot of people use their first subsidized chance for the BTO, correct? Right? It's the Singaporean dream. But also I have a lot of people that immediately after that go and use your second subsidized option. And that is something that honestly, unless due to financial issues you need to do that, right? But honestly, most of the time it's more for greed than for financial issue. If really financial issue, you usually will stay put in your BTO. It's people gian. They want to make one more round of profit. Now, the issue I see with going down that option is what? By the time you can do that, a lot of the times the grants that you can take is very low because your income is of a certain level, if you can even qualify for that. Yeah? So what's a better way to do it? I like to tell our clients, and if you're listening, push that second option all the way to the end. Because subsidized house will still be kept cheap, relatively affordable. Most of the time, about half the price of the median prices of what's transacted in those areas. Still expensive, but at least if you currently own a flat, you sell expensive, you buy a subsidized one, it's still cheap. If leaving a legacy is an option, is something you want to think about, or leaving something for your children is something you want to think about. Because you do lease buyback, you pass away, then that's it already, because very little lease, so you hardly get any money back, right? So the one if you don't care, right? But if you care, then maybe you want to keep your BTO or your subsidized house all the way to the end. Because by the time you retire, you sure qualify. Because you got no income, you sure qualify. Right? You sell your expensive HDB flat, you buy a slightly cheaper one, continue to stay. You're still going to get a decent chunk of cash out. Yeah, of course you don't go and ballot for the very, very central location one. You ballot somewhere a bit further out. So everything is with managing your expectations. Right? So I thought this is a very good article. They mentioned some points, but they missed out some points. Good, allow me to come in and supplement. And these are some of the things that you can think about for yourself in terms of what kind of retirement you want to live, right? You want to have, right? Help you manage your expectations a little bit. Yeah, you cannot have the best of everything. You don't have the best of everything, then the money cash out there is very, very little. Maybe to a point that might not be even worth it. Okay, that's really more or less what I want to talk about. That covers most of the articles, right? So all in all, yeah, please do help us like and share if you have found the sharing useful. If not, we'll be moving ahead to talk about like what we've always done, utilizing the data to analyze particular areas. So last week, we were talking about Sengkang Punggol. And we thought we can go by a clockwise direction. So Sengkang Punggol, then we go clockwise. Today we'll hit Pasir Ris and Tampines, another very popular area. But if you do have, or you do own properties, or you are looking to buy a HDB in any of the areas, feel free to drop your questions or drop your address into the chat. We'll be happy to help you analyze what's the right price to sell at, what's the right price to buy at, is it a fair price, those sort of things. Yeah. So let's get started.
I'm not sure where she saved her copy of the. Okay, then I have to find first. Can we see? Okay.
So we want to start off first by talking about Tampines. Okay, we'll start off first in Tampines. And so for Tampines, right, we can share some of the data points for everybody, right? So in May to June, right, the median prices for 3-room HDB flats have gone up about $10,000, right? So the median prices for 3 rooms in Tampines over in May was at 480,000, right? But the median prices came up to 490,000 in June. Similarly, for 4-room, yeah, maybe you can share.
Yep, so in May it was 675,000, and then in June it went up to 700,000. So that's an increase of $25,000. Then for 5 rooms, in May it was at 800,000, June 830. So across the board, the 3, 4, and 5s, they all went up by about $10,000 to $20,000. Right. Okay. Then okay. So we'll cover what we think are the value buys are over at Tampines. The first one that we identified is at Tampines Street 81.
So what do we mean by value buy? So what we shared with everyone was the median prices. So what we deem as value buys are properties that are, while not overly old, right? We don't want to just share cheapest, right? Because cheapest very naturally will be the oldest one, right? So value buy are ones that are not overly old, right? May not be the cheapest, but are still thereabouts at median prices or below median prices. They are not overly old
area.
for that particular area. Okay.
Okay, so for Tampines, the first one we're looking at is Tampines Street 81 for the 4 rooms. So it's right beside the St. Hilda's Primary School, this area. Is it too small? Can we see?
I think you have to go a little bit bigger. Right, so it's Tampines Palm Walk.
Oh, okay. That's
right beside St. Hilda's Primary School.
Yeah, so this area hereabouts.
Yeah, so we have 4 rooms that hover about $600,000 lah. Right, maybe we can, right, which is great because the median prices for Tampines 4-room hovers about $700,000 as of June 2025. Okay, so maybe we can check out some of the listings over here. Okay, in the 800 series.
Okay, this one is a bit older. Wait, let me find the newer ones.
Yep, here, over here. Yeah. So of course, if you are budget conscious, right? You can go to about 833 Tampines, but those are 1984 lah. 1984. Okay. I think you need to zoom in some more. Right. Okay. Great. Yep. Oh, great. Okay.
Okay.
Right. So the 830 lah, 833 lah, 1984, 1985 older than me So it's which means it's close to 40 years old lah. Yeah, 1985 will be 40 years old, right? So actually you could just top up maybe 100K, you see the difference? About, oh no lah, a good 200K lah.
Yeah.
200K more for something much cheaper, and you're talking about almost 20 years. It's good, yeah. Yeah, you see, no, 30 years 30 years younger. And I would say, quite good option, right? So if budget conscious, this is still okay, but be wary about the price. But if not, you could top up slightly to 820 right, to get something. But 820 will be quite a bit above the median prices already because the median prices are at about $700,000. So in Tampines, the median prices may appear a bit low, especially if you are looking at some of the newer ones, because the median prices factor in the youngest, that is just 5 years old, to the oldest, which is close to 30 plus years old already. Okay? Yeah. The second area that we want to look at is Tampines Street 41, the 400 series. Okay?
So right beside Gongshan Primary School here.
Okay, nearer to the Tampines North, Tampines North area, Sun Plaza that side
Yeah.
Sun Plaza view that side.
Okay, so looking at Guru, what's available?
So very similar price ranges. So these ones are a little bit older, but nearer to the MRT.
Yep. So the older ones.
Right. So actually older ones are 30 years hover at about, mostly around here are they mentioned, mostly are the older ones. But 670,000 actually very good size. You can get sizing almost 1,119 square feet. 1,119 square feet end up is just slightly smaller than the newer 5-room flats. But this one is a 4-room, okay? Yeah, 4-room, 680. Views look pretty good as well. Yeah, but just be wary about the lease. Okay. Next up will be Tampines Street 11, one of my favorite areas. Basically right next to the 100 Plus series, right next to the MRT station already. Yeah, very close to the MRT station, right? Oh no, sorry. Street 11 is Treasure at Tampines.
Yeah.
Treasure at Tampines area. Yeah, 100. My good friend Chris used to stay here. I think 114. Yeah. Again, the lease over here is slightly older, but very, very value for money. We could take a look. Zoom in. Yeah. Similarly, we are looking at about 600,000.
These are big units also.
Yeah, but these are quite a fair bit bigger, 600,000, but a little bit older. If you want something a bit younger, right? What I actually like is the Tampines Greenleaf area. You're talking about your 800 series, right? Those due to the amount of supply, because every year there's a batch of MOP coming in. So with a lot of supply, North Tampines North. With a lot of supply, you go up. You scroll up. You scroll up first. Yep.
Yeah. Meanwhile, if you have any areas or a particular block or unit that you are looking to buy or sell and you'd like us to help you just get an indication of whether it's a good buy or how much you should sell at, just drop us a comment and we'll get right to it.
Yep. So you see, this side, right, the Tampines North 71, 1996, so it's younger, quite a fair bit younger, 1996 versus just now the one was 1984. So,
hold on, sorry. Yeah.
So it's quite a fair bit younger, but you see price points are not too far off, 600 plus, but further out. So you're talking about maybe another 10 minutes out, right, from 10 minutes out from just now those areas. Okay, those areas are closer to the center, but actually also not directly beside the MRT. So these are great value in my opinion, because 1994, almost 10 years, more than 10 years younger than the rest. Okay.
We have coming in from Wandalo, 522957 at 597B, Tampines Street 96. Can you let us know whether you're looking at a 4-room or 5-room? Are you looking to buy or sell?
Oh, hi Hakim. Yes, inspired to do this thanks to my friend Hakim, who is a very big TikTok live, a TikTok live personality. Yeah. So yeah, we are here because of your inspiration, Hakim. Okay, I'll find the other one.
Okay.
540114. Oh, that is 114 Rivervale Walk. Okay. Sorry, your name very long. But the one inquiring about 114 Rivervale. Okay, let's see.
Nothing here.
That one she's fine.
Yeah.
"114 Rivervale, 1998. Let's see. Not many people Not many people selling. Yeah. Let me come back to you. Let's see the on the other side.
There's nothing much there. Okay, let's
For Tampines area, Ong, for Tampines area, do you have any good area to buy? 3-room flat budget 500,000. 500,000 have. You are looking at just now what we mentioned, no? Tampines Street 81. Yeah, the prices of the 3-room over there, Street 81, so your 800 series, right? They should hover at about the 450 below 500 mark. Tampines Street 41 also, the 400 series. Easy to remember, 800 series start with block 800 plus. Street 41 will start with 400 plus. Similarly, 3-room should hover at about 480,000, a little bit more expensive, right? Street 11, due to its good location, will be tougher already. Those are usually above 500. So, go look out for Street 81 and Street 41, Tampines. Okay? On the question of Rivervale, give me a while. And that's a 5-room or a 4-room?
What's the block 9571 again? Okay, thank you. There's nothing on sale there. I don't know, is it he's looking to buy or sell?
For those who put in the comments, do help us. You are looking to sell or you are looking to buy, and also if it's a 3, 4, or 5-room or executive, then it will help us help you find easier. Else, while we are waiting for the reply, right, Vic will continue with what we are talking about. So just now, right, you go back to just now that screen. So Tampines actually, just now you had one, right?
Here.
Yeah, Street 71, 700 plus. So it will be a bit further out, but younger. Good value for money, okay? Then, I want to go a little bit further up. Yep, North Drive over here. No. Wait, I need to zoom out, so I also lose my orientation. All the way. Oh, no. Avenue 10 here. Should be over here. Hey, give me a minute. Should be here. I'm not used to using the Mac. But give me a minute. Let me just zoom in. Yes, over here, right? The 600 series, okay? So if you go to the 600 series, right, the Street 61, notice the lease very, very young, 2019, right? But you see the prices, because of its distance away and because of the amount of supply in the area, the prices are actually surprisingly affordable. These are pretty much near median prices in Tampines, but the youngest in terms of lease. Okay, so if you are somebody who wants something of a younger lease but can live with a location that is a bit further away, also very good to consider the 600 series. Okay, And with that, we are done with Tampines. We want to move ahead to Pasir Ris. Okay, and for those of you who are with us, stick with us as at the end of, nearer to the end of the live, I'll be going through a case study for a HDB upgrader that we have assisted. Okay, so now let's take a look at Pasir Ris.
Okay, so for Pasir Ris, we are going through median prices in May first. For 3-room flats, in May it was 495,000 and up 15,000 in June to 510,000. This is for 3-room flats in Pasir Ris. For 4-room flats, in May it was 650,000 compared to 670,000, so an increase of 20,000. And then for the 5-room flats, 775 in May, up to 800 in June. So across the board, from 3-room to 5-rooms, all increased pricing.
From May to June for Pasir Ris as well. Good news if you are a seller, not so good news if you are a buyer, but not to worry. Again, we are here to offer you which are the value for money areas.
So for first one in Pasir Ris that we identified is the Pasir Ris Street 51 area. So where are we? Right, just below Pasir Ris Park, Pasir Ris Town Park, this area. Okay.
My parents live in Pasir Ris, by the way. So drive one extremely annoying right now. They're doing a lot of road works. So maybe as a buyer, that may be to your advantage because the owners, there's a lot of these amenities over there. Is something that you can consider. Okay, so over in that area, let's take a look at some of the listings.
So for 4 rooms, we are looking at lowest 590. Let me zoom in. Okay. This MacBook is very hard to use.
We had to make a last minute swap from Kim to Vic because Kim wasn't feeling well. That's why we are using Kim's laptop, which both of us are not familiar with. This is 4-room or 5-room?
This
side should be 4-room
Yeah.
Yeah. So actually, you notice here, in terms of net distance to the MRT, you go to the one map. Net distance to MRT, because the MRT is just a little bit further up, right over here. So actually the distance to the MRT for the price of about $500,000 or $600,000, you get the best value over in Pasir Ris, as opposed to Tampines, right? If you notice, and the lease, 1992. So the Tampines ones, the earlier ones that we are talking about, right? Your 81, your Street 41, those are 1984. So at least this is about a good 8 years younger and closer to the MRT for thereabouts the same price. Which was one of the reasons why we pointed this out, 51. Okay.
Okay, next area that this is for 4-room. Now we'll look at the 5 rooms. 5 rooms. This one are big, 1,003 plus square feet. For 700K. So quite decent value for money.
These are 5 rooms,
These are 5 rooms.
Oh, that's great value. 700,000, 1323 square feet, built in 1992. So 553, so very close walking distance to the MRT as well. 715,000. 1313 square feet. So if you are looking at things like almost, especially if you want like 4 bedrooms, potential to create 4 bedrooms, and your budget stand about $700,000, $800,000. Pasir Ris, you have a better bet in Pasir Ris as compared to Tampines.
Okay, so next area will be the Pasir Ris Street 71. So it will be, 71. Yeah, so this cluster right beside the Tampines Meridian Junior College.
So this one will be a bit further from the MRT already lah. Huh? So price point wise also, but its price point is not too far off from just now 51. But I do believe their lease should be younger. Yes, but just marginally younger lah, about 1 to 2 years younger. This is 4 room.
This is 4 room. Wait, cannot zoom in.
Yep, 71. While Vic tries to zoom in. So 4 room, you notice the price not too far off from, for just 1 or 2 years younger, not too far off from Street 51. So if you really ask me, 51 seems like a better deal than this 71 lah. Yeah, it's almost 3 bus stops difference to the MRT. Yeah.
Yep. So 4 rooms here are going for 630.
Yeah. So just now our 51, those down there was 500 plus only leh.
The previous one at Pasir Ris, let me see, 590.
Yeah, got 590 up to 600. 600 plus lah, of course, the cheapest one tend to be the low floor ones lah. Yeah. So if you want to look at net distance to MRT, I'm still a big fan of Street 51. Okay. Next up would be Drive 6 and Drive 11.
So here, right, just beside the Pasir Ris Town Park. So on the right side of the Pasir Ris Town Park, this area. Okay, so 4 rooms here are going for 590 or so, but the lease is 1987.
So older.
Slightly older.
Yeah, older. This is probably about almost the same age as the Tampines ones already lah. So drive 6 is a bit further away. So thanks, what's ya bro? Please let us know how many bedrooms is that you are looking at. Okay, then we can jump in and take a look for you.
But this one, the Pasir Ris one for the 4 room, they are slightly smaller than the ones that we covered in the earlier two. So this one is about 900 square feet.
Yeah. So a bit costly, this side, considering that they are older and a bit smaller. But for the price point is about the same as 51. 5 room for what's ya bro? Okay. Yeah, I'm finding. Kim, can I see the address again? 445B Clementi. 5 room. Okay. Come, let's help what's ya bro out. For those who commented earlier, sorry we haven't been able to reply you. But if you are still around for like Wandan Low and the one that is very long, looking at 114 Rivervale, please let us know what you need. What type of unit are you holding? 5 room, 4 room, executive. Okay. Come, let's see. Vic, you use one map to show the location so I can go map view to zoom in.
Yeah, this one is from where?
Can you show the address?
1254. Okay. Okay.
We are headed from east to west over to Clementi. You're talking about Avenue 3, Let me see. Stadium.
Right beside the MRT actually, just down.
Oh. Right below the MRT.
Yeah, should be somewhere here.
Here. 5 room. Small world. I have a client that's going to hit his MOP around here, I think somewhere in November. But since we are here, 5 room. Yep. Small, just nice, because we were just talking about HDBs above $1 million, right? At the earlier on in the live, So congratulations, you must have made a lot of money, but you are basically looking at from $1.3 million all the way up, so depending on your floor level, all the way up to $1.68 million. I believe quite a fair number of these have either just hit their MOP or haven't even hit their MOP. Maybe they are listing it out just to try for now. So these are the kind of prices, right? But maybe I think more a little bit more insights is how do you strategize in terms of MOP move for those people who are hitting their MOP, okay? So the problem with MOP flats is what? Valuations. Because if you're the first guy out over there, the valuations may seem pretty far off from what you're hoping to fetch, right? For example, let's say $1.45 million. The first few buyers come in are likely, because of the lack of transactions, the valuations may be quite far off, $1.2, $1.3 million. And then the buyer will have to suck it up and pay $150,000 COV and whatnot, right? So if you are looking for a back-to-back move and you're hinging on this, you may not want to be the first to sell, right? Because there are actually a lot of hurdles involved, potential buyers backing out, unless they are full cash buyers. But then again, full cash buyers with the 15-month wait out still in play for 5-room, chances are not that high. Yeah, so the COV definitely will be a factor. Now, holding it back a little bit with more transactions coming in, pushing up valuations, that may give you a little bit more certainty, right? And of course, likely for especially Clementi, this area right beside the MRT, the prices only will go up right now. Very, very hard for prices to come off. And honestly, 8 units listing like that is a little bit on the high side in terms of supply, in my personal opinion, for an area like that. If you wait out 6 months, about a year, it will trickle down the numbers. I likely will trickle down to like 2-3 units for sale at any one point in time, right? So if you really are hoping to maximize, but if you've already decided that, oh, by this time I want to move, you have already decided, right? Then okay lah, then you put it up, but you have to be aware of potential valuation challenges, okay?
Actually, he never tells you want to buy or sell.
Oh, if you want to buy, now okay lah, now can buy lah. But again, then of course you just flip the narrative around lor. But most likely sell lah. They can give until the precise address like that.
Oh, that's true.
Should be looking to sell. Yeah. Hopefully, give you some perspective there. Okay. Keep the questions coming, right? But without further ado, I want to touch on my case study for today. Yeah, but please keep the questions coming, right? We'll continue to answer it. So today's case study, right? This is a client of ours. We assisted them earlier on last year, and they were looking to upgrade from HDB to condo. Yeah, they were open to again resale condos, but also new condos. Let's see how we have helped them. Okay, we start off first with challenges. So their flat, one of the centrally located HDBs. Okay, however, right, because of their ethnicity, right, so most centrally located HDBs, especially if you are in one of the minority races, selling tends to be quite challenging because you most likely are affected by ethnic quota. Yeah, and to compound the issues, their unit was on a low floor. I'm talking about second floor. One side you really can see the multi-story car park. So it's really quite challenging. Okay. The last challenge, maybe I can elaborate a little bit, is because after having sat down, planned through the whole thing, we kind of narrowed down our options to one particular development. And that particular development was launching by a certain date. Yeah, and we really would have had to execute it. So actually, we really will have to execute it by then, right? So we're working on a clock, okay? And for those of you, I mean, most of you, those agents will know this is notoriously hard to sell, okay? And if you are a buyer, it's also something you have to be aware of, right? But then again, everything comes down to price. You got it at a good price. So in the end, thankfully, my owner still, our clients still yield a good amount of profit from their initial purchase. But it took really very open conversations for them to kind of accept this, because at the end of the day, I'm going to share with you guys some of the finances later. We had to take a knock of some of the recent transaction prices. I'm talking about a good $200 over $1,000 difference to really move the unit. But how do we kind of reconcile the whole thing, right? That's the reason why I kind of chose this particular case study to share with everybody. Okay, and every time when we sit down with clients, we also like to share with them, especially those that are looking to upgrade, what are your strengths, right? Understanding your strengths is very, very important, because maybe I can elaborate a little bit further. So they were open to rent, actually, and why so? Okay, it's not because it was their very, very first option. Actually, we started off with looking at some resale properties, why not, right? The very typical back-to-back move. But we came to kind of realize that based on the kind of sizing that they want, the kind of developments that they want, the areas that they were really interested in, the price was very, very high. Yeah, to the extent it was basically out of their budget. Okay, and then subsequently we thought about it. I don't know, we just happened to click onto the rent, because Go Property Guru, one side is sell, one side is rent. And when you click on the rent side, wow, the rental is essentially half of the potential mortgage that they have to pay. I mean, the unit itself was like what, 3 mil, 3.5 mil. You're talking about almost 10K mortgage, you know. The rent, $5,000 plus dollars. It's like, it's a very good deal. And which brings me to the point, how come it can be like that? And this was what kind of opened my mind up to some of these options available. Why? Okay, the development, freehold development, all, so the sizing very big, so the quantums are very big. Then you must be asking, if it's $3 million property, just rent out for $5,000, the rental is terrible, right? Yes, if you buy it to rent out. But what a lot of people miss is that the owner has bought it donkey years ago. You're talking about a good 30 years ago. He already more or less fully paid, I think fully paid multiple times over already. So this $5,000 to them is extra money, okay, already fully paid. And that's why you see this kind of huge imbalance. Anybody that bought it for, nobody really will buy it for 3 million and go and rent out for 5 years. These are day one owners. And to them, they just want a good tenant. They just want to rent it out, right? They also don't want to sell, because they sell already, they cannot buy back. But it's just that the recent prices are 3 million. So if you want to enter into it, to own it, right, it doesn't really make a lot of sense. Yeah, and they were, I mean, through our conversations, they were open enough to like, you know what? Actually, it does make sense. It does make sense. Then we take our money and we put it to a better use. So this is a whole concept of rent to rent that's increasingly popular nowadays. Okay. Another strength of them is that they have both very strong income, right? We are talking about combined almost 20 odd to $25,000. So we have lots of options, right? But as with first world problem, every budget also got issue one, also like cannot find thing one, right? There's always something better, okay? But the third strength, which is something that we work a lot on, okay, and we found out that it's really the one that can help couples and families move forward quicker, is that they have very great alignment in their objectives. Like what? Right? Back to our 4 points GPS again, right? They were both very, very focused on growth, because they both agree that they both have they are very alike in terms of what they know that they want, right? They like big old development, big landscaping, that kind of thing. They're not so much interested in some of the newer developments, which is fine, okay? Then we managed to find this little loophole whereby you can rent some of these $3 million, $4 million developments for slightly cheaper price. Their income can afford it, okay? And so you know what? They decide, okay, great, I love to rent here. This great house, $5,000, happy to pay, happy to keep renting, right? Landlord, elderly couple, won't come and disturb us, okay? Never gonna sell, right? Because they can't buy back. So it'll be unlikely to get chased out. Yeah? So then let's work hard to put our money to good use. So we focus on growth, capital appreciation. This one pure out investment, capital appreciation, okay? Number 2, size. So size is important, hence we landed on these old big developments that have provided them in terms of the sizing due to their lifestyle, right? Number 3, budget price, budget, okay? We wanted to work within the budget because while we were searching for the resale ones, we were stretching our budget to the max, still cannot find anything that they want, right? So in the end, if we decide to go for investments, a lot of the time we just pull their budget back. So we won't stretch you to the limit already because at the end of the day, it's investment, what for? Take so much risk, right? You just buy something that's a lot more comfortable, keep some buffer, and keep some buffer to help you also with your potential rental. Later on, I will show you. So budget is not so important already. They drive, and also because they are extremely focused with growth, location and both budget is not so much of the concern already. We are just making sure that the property can make money. Okay, so sharing you guys a little bit of the finances over here, very small, but if you really want to take a look at it, quick look over here, I need to put minus. Okay, so you see, in the end, we had to sell the flat for about 820,000. Very painful because the large transacted in those areas, had there not been an ethnic quota, should hover. Oh yeah, okay. That were hovering very close to 1 million. Even low floor were 950,000. So we had to take almost $850,000 knock. But this was a conversation we were having, you see. Like, if you continue to hold, will it benefit you, right? And we kind of concluded the answer is no. So let's move on. To what extent, right? So this was why having an alignment is very important, having honest conversations is important, having clarity that the next move can, because this ethnic quota thing, you want to wait for it to change, can wait forever, can wait very, very long, especially centrally located HDBs, right? So can we make less here? Because you see, end up they still make money, still got cash proceeds come out, 300 over come out CPF another 265,000 after we sell, equity in together with their cash, $700 over $1,000, not too bad, okay? Not too bad. Together with their OA and everything. So it's that, I guess I also don't know the exact Chinese idiom, but there's something like, just sacrifice a little bit today, but to gain more tomorrow, just to move things forward, right? If we were just solely looking at the sell side, I tell you, very hard to, they will not have accepted it, very hard to accept it, right? So, word of advice is really, if you're looking to sell, always also consider the both sides. Maybe sometimes on the buy side, if you can see a good value for it, then at least you can accept a little bit of a cut on the sell side, make things a lot easier to swallow. Yeah, long story short. Okay. In the end, we bought something at 2.4 mil. At 2.4 mil, it was a new development in the end because most of the time, once we determine that you're open to rent, right? We tend to prefer that you buy a newer development. Why? Right? It's because it helps you with the cash flow. Okay, if you want to take a look at this, feel free to drop us a text. We are happy to send it over to you. If you look over here, as the development is continuing to build, right? Because they have CPF to assist them. Actually, for the first 2 to 3 years, they only need to top up. They only need to pay the rental in cash, right? The owning of the property, all mostly can be covered by the CPF. Only maybe about a year or so prior to TOP, there's a little bit of top up, but you are looking at maybe a $500 extra to about $1,000 extra on top of their existing rent. Okay, which we figured out is something that they're happy to accept, right? Because had they go and buy their house that they're currently renting, they're looking at numbers that's even bigger than this, or very, very similar to this, okay? Another benefit of new developments, right, especially if you're open to rent, okay, is the fact that your cash flow is like that as such, but you have already bought into the asset that is priced at about $2.4 million. If you buy resale, it's also 2.4, right? But your repayment is higher. Okay, they come in full onset at that get-go already. But of course, not all new launches are the same, right? And of course, there's also a little bit of hassle involved in the moves and everything. But to them, and what I would say to everybody is that find a rental that you like. Yeah, explore areas that you never explored before, or in this particular case, rent in a development that has a very high quantum, very high maintenance, right? But you rent, everything is all absorbed in. You get to enjoy a $3 million house for half the price. If you look at it for the angle, it's quite good value for money, right? Then we roll their funds into a slightly newer development. And you know, we did all these calculations for them. We had some spare left over, especially together with their savings and whatnot. And we determined that there's sufficient buffer for them. And then decided to go ahead. So we are very happy for them. Now I believe the property they bought should have appreciated 150,000. But this is just before till. I do expect the prices to hit closer to 2.7, 2.8. $1 million by the time it fully TOPs lah, right? Of course, some people will say, but you see their rental expense are $5,000 over dollars, and you say make profit $200-300 makes sense, meh? Right? Can cover, meh? Right? Even if it cannot cover, right? Or even if it maybe just break even, what have we done over here by going down this route, right? What would have been the alternative? The alternative would have been they would have to sacrifice in terms of their space due to their budget, but having to be in the location that they want, compromise on something else, buy a smaller development, buy in an area that they didn't really quite like, or sacrifice a little bit on the size, right? By going down this route, they spent essentially the same amount of money, but they enjoyed the size, they enjoyed the location that they want, right? And they utilize the money to park it in an asset. So even at break even, if you see the cost and the potential profit like that, in this same period of time, they actually enjoyed themselves a whole lot more than had they bought something at the same budget in the resale market. Yeah, I hope this makes sense to you. But of course, it's not for everybody. Yeah, not everybody will do that. Okay, but I thought it's an interesting little case study for everyone to share. There's some questions, right?
Why our IG ended?
Oh, the battery, huh?
But it's plugged in.
It's okay, never mind. We have one question on, yep, you go TikTok, see the question. Never mind, IG is okay.
Mando saying HDB is a public housing, cannot appreciate price in the long term.
Yes, Commando, HDB cannot appreciate price in the long term. I mean, if you really read the HDB article, especially the article today, which we didn't talk so much about it, Chee Hong Tat's comments with hoping to keep prices stable. That at the end of the day is HDB's intention, to keep prices affordable. And if you're following what I said earlier, I believe further down the road they will hope to bring the prices of the slightly older flats down for the purpose to allow people to sell their younger, bigger, higher quantum HDB flats and have a cheaper alternative to buy if they are a lot older. So it's true. So you have to be wary about your depreciating lease for your HDB, because it is, I believe, I don't know for sure, but we think it's the government's plan to do that, right? Because right now, all the prices are so close to one another. It's very hard for people to retire kind of in the same area if all the prices are so near to one another. But if they allow the older ones lease to depreciate a lot more, at least it gives people a sufficient gap. You sell your 20-year HDB, buy a left 30-year HDB. Simply based on the lease difference, you can have a lot more extra cash out, and you don't really need all that lease anymore. So either lease buyback or keep depreciating lease HDBs cheap. All in all, play into the whole narrative correctly, right? So you just don't fall on the opposite side. You don't be a young guy buying a super old one because the government is not going to come in and bail you out. Yeah, it's all part of the narrative really, if you really can look at it like that and kind of understand it. Okay, if not, but thank you so much for all these comments. Keep the questions coming, else we will see you guys next week. If there's anything that you'd like to check with us, you'd like our help with your portfolio planning, selling, buying, we're happy to help you out. Okay, you could drop Victoria a text over here or anywhere. Yeah, if not, join our Telegram group, subscribe to the channel, like and share. We'll see you next week. We hope to be able to do this weekly, if not at the very least bi-weekly. Yeah, if not, thank you
Thank you.
guys so much. See you guys soon. Bye-bye.
Bye bye and good night.